Hello traders. The title of the video is how stock indices influence mid and small cap stocks precisely. So we want to compare the major stock indices, how they influence the mid and small caps stocks. We are recording this video today because a YouTuber did ask me an essential question. I'll mention his first name. It's a beautiful first name, Rishav. Am I pronouncing your name correctly? Rishav. It's a beautiful name. I think this is from India. Are you from Bangalore or Bombay? Because I'm from Bangalore. All right. Now, this to make you laugh a bit. All right. So, Rishabh did ask a question. He said, what is the correlation with major indices, all right, can index correct after small mid-cap stock? Will indices not correct because they are too strong? So those were the question Rishav was asking. So with that, okay, I have a very good excuse to come back on my desk and backing into my microphone, explaining to traders, all right, how indices influence mid and small cap stocks precisely. All right. So this is what I say to traders. Ask the question, put in the comment section. I take note. They ask me, oh, analyze copper, analyze this. It's all noted down. All right. And in due course, I will be backing into my microphone one more time with my Bombay accent or Bangalore accent, okay? Or Texas, okay? Let's get started. So this is a very important question. Why? Because the professional, I explained to trader before in one of my tutorial how the market works. All right, we talk about okay long-term investors, okay, and then we talk about the position traders, okay, and then we talk about the swing traders, and then we talk about okay day traders, and we talk about scalpers, all right? So those are different group of market participants. You can go on and on talking about gamblers, speculators, and so on. So, but we can talk about the Federal Reserve Central Bank, how they influence the market, and they are the referees in the market, and they give the bell. And long-term investor will take position, and because of those position trader will join them, and then okay, swing traders, day traders, scalpers, everybody doing their own thing, okay, paying attention, working for the next group ahead. So scalpers are working for day traders are working for swing traders are working for position traders are working for long-term investors. So when I say working for, it means that they are eating in their plate. They are using their trading signal or their investment signal as their setup. Okay, so with the same okay reasoning, all right, something is going on in the financial market. We have the mid cap, so talking about the capitalization of the company, small size. So when we are talking small cap, we are talking small size companies, mid cap, medium size company, okay, and the large mammoths or elephant in the market, talking about the biggest stock in the market, talking about Alibaba stock, Baidu stock, Google stock, Apple stock, all right, and so on. So those are large capital stock, okay? So now when we are talking about the indices, which okay, which are represented here like this big red here, they are they are they represent a group of stocks. So we're talking about Nasdaq 100, Nifty 50, and so on. So we put group of large capital stock in one basket and we call it an index. Nikkei 225, FTSE 100, those are large capital stocks, all right? So when we are talking about indices influencing mid cap and low cap stocks, we are saying that large capital ganging as an index against or influencing, okay, as a group, as a gang, as an index, influencing the low cap and mid cap, okay, stock. So the reasoning, okay, of Reja, which I found very interesting, he said to me that, George, the mid cap and the small cap capital have stocks have been going down. Okay, as they have been going down lately. So does it mean that soon, all right, the major indices will follow suit, or will the major indices, or are the major indices too strong to the point that the bearish sentiment relating to the low cap and the mid cap stock cannot even influence those major indices? All right. Can, so what you need to understand, reserve, is this. Okay, all is connected in the financial market, as I explained to you, between the market participant. The same thing when we are talking about low cap, mid cap, all right, in large capital stock. You have to understand that the real actor in the market, okay, or the real actors are market participants. Human beings are making decisions, all right. So it's not the low cap or mid cap as such. It's about human being making decisions. So what you have seen recently is a very good observation, because this is another question a trader did ask me about fear and greed. So suppose you are a hedge fund or a long-term investor, okay, and you want to participate in the market, okay. So you will have a portfolio for large capital or for indices for different ETF and so on in the market, yes or no, okay. So if at one point you are a little bit afraid that or you are using other determinant, can we use that in English, or is it French I'm speaking? All right, can we use another factor, or you have discovered that probably soon the market may start coming down, or you notice that the market is now in the fifth wave, or it's about to enter the fifth wave, talking about Ilian wave, or it's about the trend uh, in the medium term soon may end, or the market is becoming overbought. So you have a portfolio for large capital, mid cap stock, and also small cap stock. What will go through your mind if you are afraid that the market may go down? The first thing that you will do is to start selling the small cap, because they are volatile, they are unpredictable, they are likely to suffer more than anything else. So it's normal if the market is coming to the top or is coming to the top, that the first reaction that you see, that they will start selling in their portfolio the mid cap, because what they are doing, they are getting rid of those portfolio. Is an attitude that is intelligent, is about risk management, mitigating the risk. So if anything happen, okay, tomorrow, or the market start becoming bearish, I- if you're still holding a lot of small cap stock, they will suffer more than the mid cap, and they will suffer more than the large capital stock or blue chip stock. So therefore, because of the fear, this is it. This is what I'm saying to you. So you want to understand that human beings are doing everything in the market. So they are controlled by fear and greed. So again, you want to understand different market participants doing different in the market. The scapular love this the low cap stock, right? Day trader love small cap and mid cap stock. Okay, investors don't like them at all. They do buy them sometimes if the market environment is good, so they pile them up, okay, to make some money out of it. But they watch them carefully, and they don't want to hang around too long unless they have a strong balance sheet, and they don't hold too much debt. All right, this is good. They do it sometimes. So the first reaction is that the small cap and the mid cap are likely to suffer. So the question that you are asking is that whether the major indices will influence the mid cap and low cap. Yes, they do. They do. If they are becoming overbought, which means somebody holding them, noticing that they're becoming overbought, if that person or long-term investor or big market players is holding mid-cap and small, mid-cap and okay, a small size stocks, that market player, the first thing that that person may do, if that person is becoming afraid, that person will get rid, or not get rid, but will start reducing, okay, the exposure to those financial instruments. So with that observation, you notice it, which is an eagle eye. I need to congratulate you for that. It's a good observation. I see. So you see, they start selling them. Yeah, it's true. It's good observation. Yeah, they start selling them. Why? Because it's either they're noticing that the market is now heading through the fifth wave, if there will be a fifth wave, and they are taking precautionary measure. And the first thing that is an intelligent investor will do is start put in place risk control measures. And the first uh, financial instrument that they will look at are the low cap stock and then the mid cap stock. The inverse is also true, or the opposite is also true. Sometimes you will notice that because they know that the market is going to go up, or the Federal Reserve has signaled a bell that okay, soon there will be this policy in place. All right, okay, we will do this, we will do that, we'll do that, and they know that the market will go up. Okay, so what do? They're going to concentrate on a large cap. That's what the long term and the position trade are doing. They do care about the blue chip stock. So you'll notice that the major indices start going up, but they're not going to go up alone. They're going to go up together with the low cap and the mid cap. But what you will notice as a trader or an investor, if you are observing the mid cap, is that the mid cap, they are volatile. They will go up very fast, quickly, faster than the large capital stock. So you see that they're going up. People say, oh, they're going up. So everybody jump into it. So you buy a low cap stock. Okay, after 1 year, double, triple. Sometimes they can go even 10 times their original value. But if I boom, 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 because of this money coming to that sector, yes or no? So if that is going on, you will see that the low cap and the mid cap stock will be ahead of the indices. But they are not really ahead. It's because of the decision that are made relating to the large capital portfolio. So people are watching large capital stock, and they say that okay, we should keep buying more. We are bullish. We are happy to buy. But as they are doing so, you will see that okay, a lot of market participants that cannot afford to buy stock at $100, $200, we start piling it from the low capital. So not only the long-term investors or the professional traders, okay, hedge fund, the retail traders. So they see that oh, major indices start going up. Everybody hear in the news that okay, the market is likely to go up. Okay, so most people they hold a small cap and mid cap stock. Yes or no? All right, that's what people. Okay, most people. All right. So when they hear that, they go and buy. So everybody go and buy. So like people were buying Bitcoin. They buy Bitcoin. It's always in the news. People are buying Bitcoin. So people come in and buy Bitcoin. Oh, yes or no? That's what's going on. So the same thing. People every day they're going to work. They sit on their train. All right. On their buses, okay, they're reading the newspapers and say, "Oh, the market is going to go down soon." All kind of news coming out, so they start thinking. They say, "Well, I better go and grab my money before it's too late." All right. So those people will go and start selling. Not only they are selling, okay, they are selling together with the long-term investors and the hedge fund, the position traders. So as I told you at the beginning of this tutorial, it's all connected. But to understand really what is happening is that you have to put human beings at the center of the market. Apart from the price, the sector, and everything that we are discussing, all right, you want to go into the mind of human beings that are doing things in the financial market. So, as I told you, everything is connected. If the low cap and the mid cap stocks start going down, understand that decisions are made relating to the large capital. Now, sometime the large capital will be ahead of uh, the low cap and the mid cap because something happened suddenly. Right? Something happened suddenly, unpredictable event is taking place. So therefore, they just sell everything. Boom. All right? Just sell. Order has been given to sell. People are selling. So you may notice that mid light capital start coming down, and then in that case, it's too late for low cap and mid cap. They will just go down, go down, go down. People say, "What's going on? What's going on? What's going on?" But we can use the low cap and the mid cap stock as a market indicator also sometimes, which means while you have oil, it's a sign that somebody is getting a little bit afraid somewhere in the market, and maybe there are market, which means that there are market participants out there that do not want to hold small cap and mid cap stock in a particular time. Okay, all right. So somebody is getting rid of a small cap and mid cap portfolio. That's it. That's what's going on. Now, asking the question that the indices are too strong to avoid what is happening to the low cap and the mid cap, that's strange because they all connected. They all connected. Sometimes the fear may be temporary fear, which means people are afraid for a while. They go around, they make decisions, they sell them, and then they realize that okay, nothing to be afraid of. It's not yet the end of the trend, and they come back again. They pick them up. They say, "Oh, don't worry too much. Little stock, all right, we buy you again," and so on. You understand the message? So the fear can be a genuine fear if it's a genuine fear that is justified by the fundamentals. It takes a lot of time for the market to come down because the market usually go up more than it comes down, but it will come down very fast because of the fear which I explained already. It takes a lot of time. So people will start talking about it. You don't want to ignore it. The rumor, you don't want to ignore it. So decisions are made behind the scene. A lot of market participants, even retail traders, long-term investors, are making decisions. The first sign you're likely to see if the market is going to go down is to watch the small and the mid-cap capital. But a mid-cap and a small cap can fall fast before the indices. That can happen, all right? The small cap and the mid-cap can become bearish, and the market may continue to go up, ignoring what is happening there, which means they decided to get rid of their portfolio, mid-cap, and can be a strategy in place that if this trend is in the fourth wave, one should get rid of all the portfolio of small and mid-cap stock. Can be a strategy that a hedge fund or a long-term investor, because of their experience, decided to take. Okay, so say, okay, we don't want to hold those things going into the fifth wave. Phew. So if a major market player is selling, that may affect the low and the mid-cap stocks. Right now, if I come back now to the indices, why indices can go up, okay, when small caps and low mid caps are going down? That's a very good question. I explained to trader before that the indices, though you see them like a Dow Jones index, there are market leaders. If you want to understand more about the market leaders, okay, just go to www.dprotraders.com, click on Market Watch. You see market leaders for Dow Jones, market leaders for the Nasdaq 100. Okay, please do not ask me the market leaders for Nifty or whatever because I don't trade those stocks. So you have to find out. In London, FTSE 100 is the financial sector that is controlling London. Is the financial center of the world. So you want to watch the banks control the FTSE 100. Okay, so the indices are because they regroup a group of blue chip stock, large capital stock, but among those large capital stocks, there are what we call market leaders. They are the engine of the indices. So for the Nasdaq 100, we have two market leaders that are Google and Apple. So people can say that they should sell a Nasdaq 100, right? They can say that, right? And they will keep, they may decide to start selling. If Google and Apple stock continue to go up, Nasdaq 100 is not going down at all. It will continue to go up because the motor, the engine of the indies, no one is touching them. So to have a bit of idea, so you see now that you see that the small cap and the mid cap stock are becoming bearish. Before one can start selling the major indices, the first thing one should do is to investigate what is happening to the market leaders of that particular index. So you want to know the market leaders, and if you notice that they are selling the small and the mid cap stock, and you are thinking that they may be selling, you want to keep your eyes on the market leaders because that's what I represent here with the yellow line. It's like the fire that is cooking, all right, the major index. So for the Nasdaq 100, which is the red spot here, the fire will be represented by Google and Apple stock. All right, for the Dow Jones, we have Caterpillar, McDonald, Boeing. All right, those are market leaders for. There are other market leaders for the Dow Jones. So check it out at Day Pro Traders. I won't tell you everything now. So good excuse to go to dayprotraders.com. Click on the web page that we title Market Leaders, and you will see the market leaders. So those are the market leaders, like the fire, the engine of the indices. So instead of going from the low cap and the mid cap stock and quickly start making decisions to sell indices, one must watch the market leaders that are governing the index. If no one is selling them, those market leaders, you can be selling the FTSE 100 or selling stock in the FTSE 100. If the bank are going up, they continue to go up, you are wasting your time. That's you can quote me anywhere you go. We are wasting your time because the market leaders they put, they are not going anywhere. It's very difficult to sell. So we can predict that a particular stock index or a large capital and so on is likely to go down. So you may say, George, I'm not talking about indices alone. I'm talking also about large capital. All right. So if you see, for instance, all right, Microsoft, all right, or a large capital belonging to one particular index, all right, it's a large capital. It's not small capital, okay, but it belongs to an index, a blue chip stock belonging to an index. So you are itching to sell it, okay. One thing you need to pay attention to is to pay attention also to the market leaders in that group because it's a group, and we are talking about the fear and the greed. So when we are talking about the fear and the greed and the human being, we are talking about what? The market sentiment. It's all down to the sentiment. The market can be overbought, but if people are not yet convinced that they should sell, if they are not yet afraid, if they are not becoming bearish, the market may continue to go up. That's why we have an extension. People are saying it's going to go down, it's going to go down, but the market sentiment, all right, is not becoming bearish. All right. I'll tell you something very simple as a technical trader. On the lower time frame, one can use the moving average 8 and 20 to determine the market sentiment very fast. All right, this is just a scalping purpose. Moving average 8 and 20 on the lower time frame, one can find out whether the market is going to become bearish or not. If the 8 goes below the 20, that's the first indication that all right on that temporarily. Okay, so this is a bigger issue when we are talking about market sentiment, but something I want to mention today. So all in all is connected in the market. Mid cap, small cap, large capital, indices, they are all connected. But you want to understand what is happening. The person who is holding, or the big market player that are holding the large capital, are also holding a portion of the mid cap and the small cap capital because most of the retail traders are the activity in the financial market is not influential. Okay, so is the long term we have the long term investors, the position traders, the hedge funds, all right, the bank that are controlling the market. So the activity of the retail traders doing their own is just a very small portion of the market in general. So when those big players that are also holding the small cap and the mid cap start selling, those that are those stock will suffer, so to speak. Okay, if they are buying those stock, they will start going up. All right. So understand that they are holding large capital. They say, all right, we don't want to hold, we don't want to start selling the large capital yet, but the market is reaching a point where we need to make decisions. So they start selling fast. Okay, the mid cap, okay, and the small cap, and they start going down. Okay, doesn't mean that one should sell the major indices. No, it doesn't mean that. Now investigate, check the market leaders of those indices. They will influence the stock index in general. They will. Sometimes due to unpredictable event in the market, all right, or somebody coming with earning warning, all right, uh, the market, the large capital mechanics. So they come, they say, everybody think that Apple was doing well, everybody says doing well, everybody was buying, and then Apple coming out with very bad news. Some people were shocked and say, "What's going on? Where that's coming from? I was not expecting that." Okay, and then Apple come down. That in that case, you will see that okay, the indices will be ahead of the large capital. So sometime what we'll see, you will see that sometime people will take refuge in the mid cap stocks, and they will say, "All right, that index is still going up. All right, I don't want to sell it now. We'll hold it for now." So unpredictable event is affecting market leader or a large capital. There's a reaction that may not affect the low cap and the mid cap stock. So that's something temporarily. But if something is brewing, so to speak, is latent, going on behind the scene, decisions are made. You can watch the small and the mid cap, but you want to go through the procedure. Can we say that? Market leaders will influence the stock indices. So we pack together large capital. They're all doing their own thing. They are all elephants. But remember, the lion is the king of the jungle. A lion is what market leaders, and they will influence okay what is happening in there. All right. So all in all, it's all connected. We can pay attention to the small and the mid cap stocks to have a bit of idea what is likely to happen to the indices. We can also pay attention to the indices, which means we check the market leaders. We notice that all right, it's now coming to the fifth wave. Apple is becoming bearish. Google is becoming bearish. You see that you are holding small and mid cap. You can make a decision to grab your profit and secure your gain, or at least secure your gain, or put a defensive measure in place before they start selling it. So you escape. All right, you escape the punishment. So you notice something, you sense something, you start controlling it. You may be wrong, all right? You may have unjustified fear and say, all right, it looks to me that they're going to start selling now. And then you go and sell all your small and mid cap. And then later on, no one is selling. But your decision was correct. You didn't lose. You take some profit, yes or no? You did. Defensive measure, protective measure. This is what we are talking about. But sometimes your decision may be correct, which means you see something by observing the market leaders or the large capital, you don't like what is happening, you decided to take a precaution in place regarding your portfolio of small and mid cap. That's it. And then later on, the big player decided to start getting rid of their small cap and the mid cap. Okay, good. All right. But it doesn't mean that any time, like we see now, they're selling small cap and mid cap, definitely they're going to sell the large cap. So that's why, as I'm recording this video, I put on my chart Apple stock, and I was counting wave, first wave, second wave, third wave extended. If my wave count is correct, we have a question mark on this third wave. Is the third wave here? I doubt it. We put it here, and we talk about the fourth wave. Is this the fourth wave? Is or fourth wave of talking about the fourth minor wave of the third wave itself? Because this is not the third wave of a higher degree, it's the third minor wave of the third wave itself. So fourth minor wave of the third wave itself, and especially the fifth minor wave of the third wave itself. So what I would say to traders that understand a little bit either way is that if the Apple stock continue to go up, the market will find it very difficult to come back down. All right? You find it very difficult. Talking about large capital and major indices. So we are using the market leaders as a market indicator for the indices. That's what we are doing. All right? But remember that unpredictable event, Apple may come out with some crazy news, and that can be the bell for selling. So large capital going down fast or coming down big time, and again, before the market will come down for a long time, as it did in 2008, there must be, you see here, for many months or a year, the sentiment is very important. So the greed, the fear will be the motor. You see here, you see what I have here? This is the wood, or that is creating the fire. So this is what we are talking about. All right. The fear, the greed, those are the wood, the excuse that will create a fire that will affect the major indices. Have I talked for nothing? All right. If you think that, George, you have been talking for 30 minutes, I ask you a simple question, George. Give me 1 minute answer. It took you 30 minutes. Richard, my apologies. All right, it's a good excuse to sit down and back into my microphone. So all in all, talking about how stock indices influence mid and small cap stock precisely. This is it. It's all connected. But at the end of the day, the major player in the market is what? Human being. The fear and the greed is the factor why people are selling or buying. The market can be overbought for a long time or temporarily, but if the market sentiment, okay, does not change, all right, it's just nothing to worry about at all. That's it. If one is watching market stock indices, one should watch the fire talking about the market leaders before people start selling the market leaders or the large capital. Remember two things: the greed and the fear. So when they are afraid, they will start selling first the small cap and the mid cap. So is this the beginning of the bearish season? I don't think so. Looking at the major, the market leaders and the S&P 500, unless something talking about the war between China and the United States, unless something unpredictable, or suddenly the market become bearish. If the market become bearish, well, there's nothing we're going to do about it. Everybody jumping out, selling like a mad dogs all over the place. Well, that's the bearish party. So if the music has changed, we shall change the steps. That's it. It's all down to music. Reggae, reggae sauce. Don't dance reggae. You they start playing something else. So this is it. All right. So if this video has been truly useful to you, please let us know by giving us the thumbs up. If you say, George, that's too long, that's too long, that's too long, that's too long. And normally, if you are talking, replying to somebody that's living in India or Pakistan, you should speak in your Bombay accent. You were speaking with your Texas accent. I dislike this video. Please be sure to mark it down. All right. However, if you say that, Joe, you have done a very good job. It was not a useless 30 minutes backing into your new microphone. All right. Feel free to share with your friend on the social media. So this will conclude our discussion today about how stock indices influence mid and small cap stocks precisely. I like this question very much. That's why I spent a bit of time talking about it, turning it upside down, okay, discussing it. So I enjoy it very much. So, Richard, do you have any more questions that we can answer? All right. Thank you for asking an essential question. And until the next time, enjoy yourself and be very happy. We are the TSTW 24 traders talking about how stock indices influence mid and small cap stocks precisely. Thank you for watching.